For years, the United States has been dominating the semiconductor market while limiting the exposure China had to the more sophisticated chips. That embargo has led to Beijing to push for its own domestic supply. In just a few short years, the country's big tech companies have made some significant progress. So is it now a real rival to the United States? Here to tell us all about that, Haining Zhao, VP and Director Asset Allocation Research at TD Asset Management. Haining, great to have you back on the program.
Thanks for having me.
So this is an interesting setup, a bit of intrigue here in terms of China having to go on its own. Are they really at a place now where they're competitive with the U.S.? How do they compare to U.S. semis?
There is no doubt China is still a few years behind the United States in terms of semiconductor and general AI technology, but it is catching up really fast. That the speed is phenomenal. Just one example, SMIC, the Chinese semiconductor manufacturing fab. So last year when Huawei released its new phone, it is struggling with the yield. The yield is reported to be around 30%, but this year, according to some report and rumors, it improved to 70%. And that bottleneck is no longer there. And if you further trace upstream, looking at the semiconductor manufacturing equipment space, which is indispensable in the whole supply chain, it is also making huge progress. Earlier this year in April, in the SEMICON conference in China, one Huawei affiliated company called SiCarrier, in one go released more than 30 semiconductor manufacturing equipments, covering etching, covering atomic layer deposition, all kinds of sophisticated instrument. It just shows that China is moving super fast in this space.
All right, so you mentioned Huawei there as domestic capability and SMCI. There's a few things happening there. I think there was a big headline about Alibaba the other day too. Weren't they talking about the fact that 50 billion is not going to be enough in terms of their AI development? Walk me through some of the Alibaba stuff.
Right. For example, what got people really excited is Alibaba cloud revenue is picking up notably in the last quarterly earnings release. The cloud revenue is growing at 26% year over year, much higher than the previous quarter, 18%. This whole thing is driven by the AI demand. In the latest cloud conference that Alibaba just held, it mentioned that it's going to double down on the AI-related investment over the next 10 years. It's going to increase the power consumption for their AI data center by a factor of 10. So if you think about in the future, the chip is going to be more efficient, essentially consume less power, which means the actual build-up of scale is more than 10. So
interesting. Alibaba CambraCon, I'm not familiar with this name. What's going on here?
It's another domestic AI design company, AI chip design company. So earlier this year, in their latest quarterly earning release, you see their revenue is growing 43-fold, almost 44-fold. And last year, they were still making a loss, but this year they have turned into a profit. Essentially, the chip demand is super high. So like Huawei, they provide AI accelerator chip, which is demand is outstripping supply.
Now, when we talk about the actions that Washington's taken against Beijing in terms of the chips that were allowed to be exported into the Chinese market, this was meant to curb, from what I understood, their technological expansion. Right? It's like, why are we giving them the latest technology? Has this just done the opposite? I mean, it sounds like they're working pretty hard on trying to catch up.
It seems to backfire. If U.S. were to do this to a smaller economy where they don't have the market depth, they don't have the money, and they don't have the engineering talent to do all of these, it might work, right? But for China, it's the second largest economy in the world, and even 5 years ago, China is already importing hundreds of billions of dollars of semiconductor every year from overseas. Now, if U.S. impose this export ban or embargo, it just makes China more determined to create their own ecosystem. So it definitely seemed to backfire. And right now, you are seeing that so U.S. is kind of in a dilemma. So if U.S. allow more sophisticated chip to be shipped to China, obviously they are shooting themselves in the foot. But if they continue to ban, it will just create a huge market because theoretically, in a free market, if all of the chips can flow freely, then the Chinese chip is not going to be competitive compared to the NVIDIA or AMD. Then the domestic player, will have a tough time grow and even survive. But now U.S. created artificial barrier. Then all of these domestic chips company are thriving. Just like the example that I showed you before, SMIC seeing record demand. Cambricon, their revenue is increasing by 44-fold. Not to mention there are a whole lot other domestic chip startup company that is going into this space.
So you have this big move on the domestic market. It seems domestic focus. What are the implications for the global market?
Right. It certainly will have implication on the global market. Just we have seen the DeepSeek moment, right? It has huge impact on NASDAQ and all of those chip company for a while, and then people realize, oh, all this does is make the token cost cheaper. In the end, it will create more demand. In the end, it doesn't create much of a damage. But I think in hardware space, it's a little bit different. So think about it, the whole reason why the NVIDIA chip is priced so expensive is nobody else can manufacture it. If Chinese ecosystem kind of master this technology and create more supply, then that means over time, these chip demand for the Western counterparts might come down, and it would simply make everything a little bit cheaper. Is it end of the world? Probably not, but it's definitely a pressure to their margin.